Hi, thanks for coming to our website. The reason why we have created this short video clip is because we have received lots of calls from sellers like yourself who is keen to know how we can help you to ride this property boom to your advantage by cashing out at record prices, and work out a strategy after you sell your property, how to best invest your profits for best returns, identify which are the properties that are undervalued now and how you can benefit from this. I know you're busy people, but just give us a few minutes and you'll walk away feeling really excited about how you can own multiple properties with strong capital appreciation as we take you through a real life example. So I'll start right away. I received a call from Mr. and Mrs. Tan a few days ago, and they asked me these questions, which I'm sure are on many people's minds. They said, I know that we'll make some money if we were to sell our property now, but we're comfortable here with the place and also with the monthly mortgage payments. But we're also kind of curious about how we can cash out and then own two properties instead of one, so that we can enjoy capital appreciation on two properties instead of just one. Can you tell us how we can go about this? If I were to cash out now, won't buying another property be equally expensive as well? I don't want to take risks which will make me spread my resources too thin. What do you mean by undervalued properties? I would like to know what are the good deals out there, but I really don't have the time to do the research. Here's what I shared with the Tans. Since your property has already appreciated by about 50% since you bought it a few years back, could this be a good time to cash out? Because the property market may not continue to grow at such a spectacular rate like the last few years. Your property may have reached most of its potential for growth. It will still grow in price, but maybe at a slower rate of increase. Won't it make good sense to cash out at peak prices now and then split the resources to buy two properties instead of owning just one? And also to invest in another property that is still undervalued now and poised for further and more explosive growth? Let me show you an example of a good buy with this chart. This is a chart that shows the prices of 5 condos in Ang Mo Kio District 20. The highest price condo in this chart is Central Residences, which is moving beyond the $1,600 PSF mark. Next, we have Grandeur 8 represented by this line with the yellow circles and is transacting at only about $1,000 PSF. In my personal opinion, I find that Grandeur 8 is very attractively priced because of the following. It's only 7 years old and it's minutes walk to the Ang Mo Kio MRT. Yet it is still in the same price range with other nearby condos which are older and nearer to Yio Chu Kang MRT, which is one further MRT station away. I think Grandeur 8 has lots of room to move upwards in price, and I won't be surprised if it goes up to $1,200 PSF in the next few years, especially when I compare it with other condos, for example, in Punggol, where one of the under construction projects sold out at $1,200 to $1,003 PSF. So to pay $1,000 PSF for a unit at a central location like Ang Mo Kio, and which is minutes walk to the MRT, is to me a good buy. At this juncture, I have to put in a disclaimer that the above is my own personal observation and opinion. Also, nobody really knows for sure where property prices are going. Not even the most qualified economists or well-known academic whom we so often read about in the media. I'm only recommending Grandeur 8 based on current market prices and conditions. The other rule to go by is also never to overstretch our budget to buy something we are not comfortable with. For example, if the mortgage payments are too high and we have to lose sleep over where the next installment payment is coming from. If it is so, it's not a good buy or prudent investment. As a rule of thumb, it's always a good practice to have reserves of at least 6 months worth of monthly installment payments to see us through. When buying for rental income, we also have to keep to this rule because there may be times when the property takes a longer time to rent out. Next, we went through with Mr. and Mrs. Tan to find out how much their sale proceeds will be when they sell. With this cash proceeds, are they able to buy another investment property? And what kind of investment property can they buy? Commercial? Residential? What are the limitations and advantages in these two types? Mr. and Mrs. Tan bought their present home, which is a 3-bedder in Northwood condo, for about $810,000 a few years ago. They would like to move to Woodlands as it is nearer to their children's school and place of work. I suggested that they look at North Oaks in Woodlands and worked out the sums with them. Now, the Tans had bought their unit at about $606 PSF. The size of the unit is 1335 square feet. Now, the market price of the unit has increased to about $936 PSF and can sell for approximately $1.25 million. If we minus the stamp duties, legal fees which they have paid when they bought the place, and also the commission for the sale, the gross profit is about $440,000. However, we also have to add in the 20% down payment they have put in when they first bought the place, because this represents the total amount of funds they have in hand if they sell the place. This amount is made up of cash and CPF depending on the proportion they put in initially. If they did not sell, this 20% will remain stuck in the property. So in total, after selling the place, the Tans will have about $575,000 made up of cash and CPF at their disposal. Now, if they were to buy a 1238 square feet 3-bedroom apartment in North Oaks, it will cost them about $834,000, and the 20% down payment will be $166,000. Adding in the stamp duties of about $19,000, their total outlay is $186,000. Remember that they will have about $574,000 at their disposal after the sale of their Northwood apartment. If we deduct the 20% down payment of $186,000 from $574,000, the Tans will still have about $388,000 to invest in another property. Take note that I'm just doing a rough calculation here as I want to communicate the concept to you without bogging you down with the details. For a more detailed calculation, I will need to have the exact amount of CPF and cash that the Tans will have used in the initial purchase of their Northwood apartment. So what kind of investment property will be suitable for the Tans based on their budget of $388,000? I've identified an office unit at International Plaza because rentability is top priority. International Plaza is very centrally located as it is right above Tanjong Pagar MRT. Because of the small size of close to 500 square feet, it is also very easy to rent out. The down payment is about $180,000, but one thing to note is that down payment and mortgage payments must be in cash, as CPF cannot be used for commercial properties. If we project that the price can go up by 30% after 10 years, which I think is a conservative projection, the sale proceeds from the sale of this office unit will be $704,000. With another suggestion for the Tans if they prefer to invest in a residential unit, as they may want to use it as their retirement home in future. They are able to use their CPF towards the down payment and mortgage payment of this investment, but their loan amount will be 40% as this is their second loan. The other thing to note is that this unit is still under construction and their rental income will only start once the unit is ready for occupation. This unit is a one-bedder at one of the developments at Bendemeer. If we project that the price goes up by 30% in 10 years, the Tans tend to take back about $500,000 after selling this unit. Let's look at the sums. The sale price for International Plaza now is about $900,000 for a 481 square feet unit. The down payment will be $180,000, which is to be fully in cash. The current market price for rent there is about $7 PSF, and the monthly rental will be about $3,367, which is derived from $7 PSF times 481 square feet. Bank interest is about 1.13% at this moment, but let's assume that it is higher at 2%. The loan period is 30 years, and the loan amount is $720,000, which is 80% of the sale price. The monthly installment is at $2,660, and there should be passive income of a few $100s every month. And the light at the end of the tunnel is when this property is sold, when it appreciates by about, say, 30% in 10 years' time. The amount that can be realized from this investment is about $704,000. Of course, if you minus the $180,000 down payment, the Tans will still be able to net a profit of about $524,000. Next, let's look at the calculations for the one-bedder apartment. The sale price is $591,000, and 40% of that as down payment is $236,000. Assuming that bank interest is again 2%, and if the tenure is 30 years, the monthly installment for this property is $1,310. A unit like this in today's market is able to fetch about a monthly rent of $2,800. The Tans should be able to enjoy about $1,500 monthly as passive income. Like I mentioned just now, if this investment is liquidated at the end of 10 years at about 30% gain, the Tans will take back close to $500,000 inclusive of their down payment. I hope that you can see how you can unlock and free up the capital in your current home so that you can multiply your assets and build up your wealth. That's all I have for you now. If you're interested to have a custom-made plan for yourself regarding your properties, please call us and we'll be glad to share much more with you. For example, you can pick an area and with our comprehensive software, we can immediately spot properties that are selling at undervalued prices. We can also do a detailed calculation regarding properties you can look into as your next residence and investment property. We will also do a detailed evaluation for you to see if you are affected by any government regulations like the additional buyer's stamp duties or the seller's stamp duties. We'll also share with you strategies to get loans of up to 80% for additional properties. You know, you really owe it to yourself to call us now and be empowered with precise knowledge and information to make your next right move. Until then, take care and stay tuned.